Hey, how are you? This is Daniel Rezendi, and today we're going to have an international look on does property investment raise house prices in the long run? And this is the photo of today. It's me. I was trying to kind of get like the sun just above my hands. I don't know if you can see it. Yeah, I thought it was pretty cool. A picture that's from like 5 years ago, but whatever. So, food prices are too high. Let's ban investment in farms. Infrastructure is lagging. Let's ban infrastructure investment. Those, of course, sound like very stupid things, but people say things like that about housing all the time. House prices are high, so let's ban investment in housing. And of course, any arguments that kind of make this make sense, they fall off once you see the economics behind it and what the research actually indicates. So let's start with just a basic supply and demand. This is a little bit of a more technical video, but if homes are bought to be rented out, prices for buyers will increase because there are more buyers on the market. Investors went and bought houses purposely because they wanted to rent that house out. And prices for renters will lower because now that house that would be having bought and wouldn't be on the market for rent. It actually is on the market for rent. So if anything, if homes are bought to be rented out, prices for buyers will increase and prices for renters will lower. But that's just in the short term. So if you can see here, investors, they put more money and they come up as buyers. So that increases, of course, the amount of sales units stay the same. So that increases the amount of money chasing the same amount of houses. The house prices increase. And of course, since they're buying it as investors, what they normally do is they rent that out. So those sales units will become rental units, and the number of renters didn't change. So what happens is the prices for renters will actually go down. So that's more or less how it works in the short term. Of course, what happens after that is also equally important because more investment in houses results in more profits for developers, which in turn incentivizes two things. First, investment, and second, new competitors. So, of course, the investor money being poured into housing. These houses, they're sold for more than they would be sold otherwise, which means extra profits for the developers. Now, if you're a developer and you have any sense and you just made a lot of profit on a certain type of housing or a certain type of investment, what you do is you do more of that investment. So you have more money to build, and therefore you're going to build more than you would otherwise, more than you would if there was no investor money in the housing market. And of course, entrepreneurs and investors and businessmen, the way they see it is, well, those developers, they're making a lot of money selling houses and building and selling houses. So new competitors will arise and they will also build houses. So this investor money generates more profit, which in turn lead to more housing construction. Unless you believe that people wouldn't want to build more houses if the houses are being really profitable, of course not. They would want to build more and more, and they would have more money to do so exactly because their profits were higher. All right, so that's really important. Now, what happens from that? So this extra investment in housing or in building housing increases the total housing supply. It has to. Like those developers are going to build more houses than they would. More competitors will show up. They will also build more houses than they would, which tends to decrease both rental prices and housing prices in the long run because there's just more housing. More money invested in housing means more houses being developed. More houses being developed and built means lower, well, it means a lower price for houses. It means more houses per capita, which is obviously a good thing. So even though it's bad in the short term because it increases prices for buyers momentarily in the short term, it's good for everybody in the long term. Well, everybody who wants to buy or rent houses. There is some solid evidence on foreign investment and on that sort of thing. Because of course, some people they think that domestic investment is good, but foreign investment is bad, which makes no sense. It's the same amount of money. So there's I think 3 studies that I pinpoint here. You can literally just Google it. If you find any mistakes with that, by all means, comment, and I'll pin your comment if it's a good comment. I'll make another video. My mind isn't set on anything. It's just the evidence, you know. So there was There was a study in Australia, there was a study in Mauritius, there was a study in Hong Kong. In Australia, a panel study of Australia from 1990 to 2013 found that foreign investment in existing homes did not significantly raise house prices, while foreign investment in new housing development was linked to lower prices, obviously, because those are new houses being developed, with a 10% increase in development investment, leading to a 1.95% decline in prices because more supply helps affordability. That's obvious. And Mauritius studies found no significant long-term association between foreign investment and existing residential real estate and rising housing prices. And Hong Kong price dispersion analysis, a 2025 micro-level study in Hong Kong looked at investor activity in price dispersion patterns. It shows that investor purchases often reduce price spread among similar homes, implying improved price convergence and efficiency, even in slower markets. Again, it's the same thing for everything. You want more food, you invest in more farms. You want more infrastructure, you invest in more infrastructure. You want more housing, you invest in more housing. Where that money is coming from is irrelevant. The fact is, it's going to end up being shown as profits to developers, and those profits are going to be invested because that's what companies do. When something makes them a lot of profit, they reinvest more in that which gave them that profit. It's just literally just math and logic. So empirical evidence indicates that real estate investment increases liquidity and alleviates shortage. Maybe not in the extremely short term, maybe not in the one house that you personally want to buy, and I don't know, that maybe a Chinese investor buys it from you because they paid more. Yeah, sure, in that case, you were screwed. But in the long term, in the long run, which is what governments should analyze, housing tends to be more affordable, and it has to. So I'll discuss other ways of reducing house prices in another video. This is just not an efficient way. So wrapping up, while limiting foreign or domestic investment in real estate, especially for purposes of rental, creates a temporary relief in house prices for buyers, maybe, it also restricts the money supply and lowers total investment in real estate construction, which in turn lead to higher housing and rental prices in the long run across the board for renters and for buyers. Investment is essential in creating an efficient, liquid, and accessible market with plenty of homes to go around. That applies in everything, in food, and I don't know, the computer market, in everything. And simplifying zoning laws, investing in verticalization, that is apartment buildings, and creating sensible limits to immigration, because guess what? If there's a lot of people, housing is going to be more expensive as well. Those are all much more sensible solutions to the housing problem in the long run than just trying to stop people from buying houses as investments. They're helping the housing market, not making it worse. But yeah, do you think property investment is a good thing? Let me know in the comments below.